What if you could add a rent-driving amenity that increases NOI, reduces vacancy, and costs you zero capital while your competitors are still cutting checks? I think it's compelling for any property owner, and that's exactly what we're going to dig into on our episode today. So without further ado, hello, fellow investors, and welcome to Ritter on Real Estate, where we teach you how to passively invest like a pro. Today, we're talking about EV charging. It's not just a sustainability story, but there's a capital efficient value add strategy developing in multifamily around EV. So we're going to dig into it with our guest, Ben Kaner. He's the COO of 3V Infrastructure. Ben brings a rare mix of infrastructure, finance, real estate, and operating experience to this space. And Ben, welcome to the show.
Hey, thanks, Kent. Looking forward to the conversation.
Yeah, me too. So I think there's going to be a lot of value folks will take away on as we really talk about a niche that I think could bring some additional revenue to folks' properties, whether they're owners themselves or whether they're investors in other deals. It's something to be great to bring up to those owners. So as we dig in, first question really is, why does EV charging matter now for multifamily owners? I mean, especially given today's markets, like why is now the time?
If you just look at larger, trends in EV adoption and things of that sort, we see that about 30%, a third of renters are interested in charging. And this is through data from big guys like Greystar and things of that sort. Average of, they're willing to pay an average of $66 per month more when they do these rent surveys. So, again, it's a demographic that is out there in the world. And truly, I don't know if you're an EV driver, but if you have an EV and you are not able to charge at home, you're probably not going to rent an apartment if you're a renter, right? So, for property owners to capture that, third of renters that are interested in EV charging, they need to have charging as an amenity at their properties.
It makes a ton of sense. And as it continues to get more popular and more popular, right? And so are there things that, for somebody that we actually have EV at two of our properties and we've definitely seen some returns from it, but I think here in Indiana, we're probably a little bit of a different place on the curve of adoption. While, we see people that are definitely interested, but we haven't seen that big demand yet. Are there things that owners really just don't understand about it? Maybe it's geography, maybe it's regulations. Are there places where, when you talk about that 30%, where it's much higher in, coastal markets, California, lower in others, or where regulations really make it either make sense or not make as much sense?
Yeah, absolutely. If we zoom out even more and look at the global, right now, 1 in 4 cars globally are EVs. So 1 in 4 cars sold globally are EVs. Obviously that's a big number. That is not the case here in the United States. We were definitely on a kind of a different adoption trajectory, call it a year and a half ago. And we all know what happened about a little over a year ago. And with different administrations, the wind blows in different directions. But, this is happening, right? Electrification is happening, and it's happening globally. And even our car companies know they have to compete on the global scale. So they're bulking up their EVs. Maybe not all of them are going to be even sold in the US, but, it's something that they need to be able to compete with. In the US, we had 1.3 million EVs sold in 2025. That constituted about 8% of total car sales. And even with the headwinds, from the administration, this was the second highest year of EV sales on record. So it is definitely going that direction. Again, even just with electrification, even if you look at, other macro trends like, AI, data centers, all of the energy and all of the increased, grid resilience that stuff is going to need. The world is going towards electricity, right?
Gotcha.
To your question more specifically, absolutely. There are different markets that have, are better and worse for EVs. As you can imagine, even with real estate, you kind of get that, kind of smiley face, right? Kind of the coastal range of where, people think about investing in real estate, thinking investing in multifamily. And it's similar for EVs. I mean, if you look at markets like California, Texas, actually surprisingly, Florida. I mean, it's not really red and blue, right? It is kind of these bands, obviously, the Mid East and the Northeast are big ones as well. And then you've got pockets of things, really in urban centers and around urban centers. Obviously rural, you get a little bit, you get a lot less, but, urban and suburban, and, kind of that, kind of smiley face of the United States, does see, higher EV adoption. And also it's been driven historically on subsidies, things of that sort, obviously in places like California, as well as, a lot of other states across the country, they have had very, very, healthy subsidies, both at the, generally it's at the utility level, actually. So kind of a jurisdictional level. But that's driven a lot of EV adoption. And so, yes, absolutely. You have every city, every jurisdiction is different. When we underwrite, and we can talk more about how we kind of go to market here, but as we underwrite properties, we're taking very, very granular, actually to like the half-mile radius of the zip code level. And that actually, is how we're looking at EV adoption numbers, EV registration from the DMV, and then also projections of how utilization is going to increase over time. Again, very, 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 very granular, and geography specific data. So yes, it's long answer to your question. It is absolutely, contingent on different markets.
But it sounds like overall, even with a lot of the incentive, I think a lot of the incentive going away on buying EV cars, you're still saying broadly nationwide, we still are seeing sales grow of EVs as a percentage of cars being sold, right? And you said early on that, would you say 30% of renters, about a third of renters, say that that's something that they would, what was the quote, they'd like to have, or that they would pay additional for?
Yeah, they're interested. So this was actually, I don't know if you've seen this before, but Greystar does a big survey. And obviously Greystar is the, 100-pound gorilla or whatever, however that term goes in the space. And they just see so much stuff that they do a survey of all of the properties that they own and manage and say, okay, all your renters, you have all these things. They did ask a question on EV charging. It's just one question, but yes, a third of renters are interested in EV charging, and they're willing to pay an average of $66 more per month for it. And, $66 in the, depending on, obviously that could be a drop in the bucket, but you think of a 300, 400 unit building, you think of an entire portfolio, hundreds of buildings for, a large owner. And that's actually a very meaningful statistic. And I do think that, it's not only, it's not, that $66 is just asking people, well, what would you pay? Right. That is not actually saying like, well, how does an amenity like this help us increase rents? And thus really help us increase NOI. And as we all know, it's all about increasing NOI so we can increase property value. So I really think it's having that amenity and being able to, attract that demographic.
Sure. And me and thinking as an owner and thinking, owning these properties and said, well, there's definitely got to be a capital investment up front, right? To do this is how I think about it. So it's that trade-off of, what's the cost versus what's the return. But that's also one of, I think, the things that makes you guys unique, if I'm correct, is you have kind of a unique structure in the way that you do deals where it's not so capital intensive up front, right? So maybe walk me through what that looks like, how you partner with operators and kind of how that cost is shared or how you guys put a deal together.
Yeah, absolutely. And I do want to get back to something. And I really appreciate when you said in the opening, like, this isn't about just about sustainability. It is not about sustainability anymore. I mean, we do obviously talk to sustainability folks, at larger, real estate, companies that have, a VP of sustainability or director of sustainability. But generally, we're talking to asset management, right? We're talking to portfolio management. We are talking to folks that are doing, the hard numbers and looking at this as a way to drive both revenue, and I'll talk a little bit more about how our model, does help drive direct revenue from chargers, but also again, just that ability to charge higher rents and thus, really increase NOI. So on our model, yes, we have a truly no cost solution for property owners. We are an infrastructure investor, so we raised capital not in the real estate space, in the infrastructure space. So we even have more patient capital than most real estate owners out there in the world. And the way that we got our investors excited about this is, what we do is we say, okay, there's going to be absolutely no cost upfront to the property owner. So we put in all the capital, and it's not like a charging as a service, which you might hear of, where somebody puts in all the capital, but then they owe us a monthly fee. There is no monthly fee in our solution. And really the way that we make money is we actually charge the driver, right? So we put in all the capital, we own the EV charging stations on the property, and then we charge the driver a margin above electricity costs. But again, this is totally a no-cost solution. So then we'll reimburse the property owner from day one for the electricity costs. So it's no out-of-pocket to them. We're making again, that margin above electricity, and then we'll actually profit share with the property owner after we make a small threshold return. So we're not only taking most of the risk up front, most of the risk, again, on the utilization, on people actually utilizing the chargers, but then we'll also let the property owner partake in the upside. So it's really a truly no-cost solution, different than charging as a service where the property owner owes us a monthly fee, and it becomes, really truly no cost for that property owner.
Interesting. Okay. So if I walk that back to understand, you guys are putting in all the upfront capital to actually install the EV chargers on site. Then you're billing the people actually using the charging, right? Yep. You got to pay for electricity, right? You're passing that through. You make a little bit of margin on that for the service.
Yep.
And then you're revenue sharing that margin with the property owner.
Yes, we are we are reimbursing the electricity cost, and then profit sharing the percentage of that margin, right? And we really see this as a solution that really aligns our incentives with the property. Again, not only are we taking on most of the risk, but at the same time, we need to make sure these chargers are working all the time. A big thing in the industry, and kind of how the industry has gotten a black eye, is chargers don't work, right? We need to make sure that these chargers are working all the time, doing all the O&M, everything that we need to do, because if they're not, we're not making money. Secondly, we need to make sure that we're not gouging tenants, right? Even on that margin, if we're trying to gouge tenants, then they're going to go somewhere else to charge, and we're not making money. So it has to be a really fair price, and, not only the convenience of to be able to charge at home, but also, a fair price. And then thirdly, we need to make sure that there's enough chargers, right? Not only are we going to put the initial capital in, but we're going to monitor these things, very, very closely. And when we see that there's enough utilization to warrant putting new ones in, we're going to put new ones in, because if you drive up and you need to charge your car at night and there's not a charger available for you, not only on one night, but on 2 nights, you're going to be, you're not going to be happy. So, again, this solution really does align our incentives with the property owner. And again, it's all about providing those tenants with the amenity, with a very beneficial amenity that people are asking for.
Yeah. A lot of that makes sense. I like the idea of, this revenue share. I like the idea that you guys are maintaining them, because I'm sure that's something that could fall by the wayside of just, you put this on site and you say, well, how do you even know it's working? What do you have to do to maintain it? How do you keep that done? And then from an operator, if we're not having to come in out of pocket up front, because a lot of times if we own the property and we've owned it for a while, there's not just money sitting aside, right? We're running them very efficiently, distributing to investors. And so you guys take on that upfront burden. There's still some upside to the operator because it's a revenue share, because you're kind of providing a captive audience there in the residents. And so I understand how that model works. I think it's well thought out.
Yeah. And really a big component of this, especially, depending on the size and scale of the operations, even one, property, you got to coordinate an EPC contractor. You have to coordinate permitting. Like this is not a small thing, especially for a ground up development. And think about that. If you multiply that by a larger portfolio, 20, 50, 100 properties, right? I mean, just the logistics of getting these chargers in alone, is a huge undertaking. And then again, it's not just a set it, forget it type of thing, right? What we do is we monitor those chargers all the time, right? We make sure that they're working. We make sure that the price that is set is actually the correct price. So really taking out a lot of the operational burden, not only the capital burden, but the operational burden from these property owners so that, again, they can have this great amenity that works very well, that helps them, charge higher rents. Again, drive NOI up. I mean, and I think a lot of property owners have seen this because many of them have dabbled in EV charging, especially the larger ones. Maybe they've done it in California, not in all their properties across the country. They realize it's, it takes a lot of work, right? And also secondly, you're just not going to make a lot of money off of it. I mean, we, again, as as infrastructure investors, we're not necessarily excited about the one property. We're not excited about the 100 properties or, even a number of our larger clients' portfolios together. We're going for the thousands and thousands of properties, and we really get that scale and are also able to diversify risk by virtue of having those thousands of properties. And that's really where you make money. On the single charger, this isn't going to be a drop in the bucket for most property owners. It's really about, driving up NOI through increased rents. And that's really where you're going to see the big bumps.
And how does a resident actually sign up for this service? So it's on site. Somebody has an EV. How do they sign up to use it? What's that look like?
Yeah, I mean, so we are an investor, right? We are not a hardware provider. We are not a software provider. We are literally the bank, right? So okay. we are technically hardware and software agnostic. Now, that doesn't mean we'll use just any old charger off Amazon. We do have a very, very rigorous vetting process, and we have, some key partners that we would recommend to clients, but really it's the right tool for the right job. We'll bring in the best hardware and software that we think for an individual site. And every site's different, right? A garden style apartment versus a parking structure, it's different connectivity issues, and there's potentially different hardware and software providers out there that are better for that use case. With that, a driver would drive up, and just like really any other charger, whether you're going to Electrify America or, if you're a Tesla user or an EVgo user, and these are all fast chargers, but, they'd go and they'd sign up generally on an app, and that hardware and software provider's app. And then, that would just allow them to plug their car in and initiate the session. So again, we're kind of trying to use the best, we are using the best, hardware and software out there in the world. And, it's easy for a driver to sign up with whatever app, that hardware and software provider provides.
I gotcha. So you guys, you kind of bring it, because it is a done for you service, right? For the operator. I mean, yeah. But you're going to kind of one-off, decide the hardware, decide the software, put it on site, install it. There'll be an app that's used. It sounds like that's how they'll pay, and then you'll facilitate all that. And so then what does it look like for the operator? For the person that owns the property? Like, so how does the EV charging show up in NOI? Rent growth, resident retention? Like, what are you selling to the operators? Like, what should they be expecting?
Yeah. And really, again, besides the capital provider component, we want to be your trusted EV, partner, right? We want to be that trusted advisor that's going to advise you through all this stuff. I mean, there are a plethora of hardware and software providers out there. We've done a massive RFI across the entire industry. It continues to change. I don't think that in, 5 years from now, which is, generally the useful life of a charger, some of these companies, these hardware and software providers are going to be, still going concerns, and some of them aren't. So there's going to be a lot of consolidation. And that's one of the things, is that we're in this for the long term. Our contracts are generally, 10 plus years, we expect to have relationships with folks for even longer than that. And not only for this owner, the owner today, but we know that everybody, we work with people that's jobs are and key focus is buying and selling real estate. We can't get into the way of that, or else or else they wouldn't do any business with us. So, all our contracts are completely transferable, and we fully expect that this is an amenity not only that the current owner can maximize and help them, but then the future owner, this becomes accretive to any sort of acquisition. So, I think to your question, the owner doesn't have to do much. They can do a lot or they can do a little bit. We provide full reporting to them. We provide, usage data. We provide, financial statements so that they can, look at, exactly what money they're making. And as you mentioned, it's really about increasing rent growth. And, some of these surveys show that. I would love to have more specific data from our properties as to, what they think an EV charging amenity drives in a specific market. I don't have that data. But we are definitely seeing that, rents are down, right? People are kind of bracing for winter, I guess, as you would say. And, you see that people are looking to try and, decrease vacancy and just make sure that, folks stay in their apartments. And so, being able to differentiate not only to attract a new tenant, but to attract, folks, so they stay in units and we don't have that vacancy, and that turnover is a really big deal. So, all of these things, unfortunately, I don't have specific numbers on, how much vacancy or how much, turnover can we prevent, how much NOI are we actually, or how much are we allowing people to actually increase rents? But, from a, kind of qualitative standpoint, we definitely are seeing that with our customers. And that's why they're really focused on working with us across most of their portfolios. And, we've got some big real estate owners that, know this is a thing. They probably have dabbled in it and they realize this isn't a thing that I want to do myself. So let's bring in somebody else and, we can again put our capital in and give them most of the upside.
Yeah. I mean, it sounds like it could be really compelling, right? And there's not a lot of downside for the operator. I mean, you guys, it sounds like are taking a lot of the risk. I'm curious if it, if you get in and there's just not really anybody using it, on a property, then kind of what happens there? How does it go forward, or what does that look like? Just
Nothing
on
happens.
like a downside scenario.
Again, we are, effectively a finance shop. So, I mean, you should see my Excel models. I used to be in, the finance game and I can't even, use one of these things anymore. The thing will crash your computer and take 10 minutes to, go through all the macros and whatever calculations it's doing. But, again, we're layering in a ton of data into when I get a property list. So if a, owner gives us a property list with 10, 20, 100 properties on it, we'll actually layer in a ton of data. Again, what is EV adoption in the area? What is EV registration? So actually data from the DMV. And then what does EV adoption going forward look like? So we're making a lot of forward projections. So a lot of times we're building ahead. So even, we say, okay, well, we're going to put in 4 chargers, and I don't like to say that we build small, but we build to the moment. So what we'll do is we'll put in, generally 4 is kind of like the minimum. It's kind of like you don't get really economies of scale with all the infrastructure and whatnot at below 4. So we'll put somewhere 4+ chargers into a property. And then, based on our projections, we'll understand, well, should it be more than 4 today? Or do we think that it's going to be, take 2 years, 3 years, 4 years before those chargers will, warrant adding more chargers? So we're patient, right? I mean, we know that our payback period is probably somewhere between 4 and 6 years on average. That's okay for us, because again, we're infrastructure investors. We see this on a 20-year time horizon, right? So that's kind of how that works. And so nothing really happens if people aren't using the chargers for the first few years. We just monitor that utilization. And when we start to see utilization getting to about 25, 30%, And how you can think about that is there are 24 hours in a day. So 8 hours is about 30%, right? So that's 8 hours all night, every night. So if somebody is using a charger all night, every night, so 8 hours, 30% of the week, then we want to drop more chargers, because again, that means that charger is taken up every night. And then, it's not going to be there for somebody else. So when we hit that 25 to 30% utilization mark, we'll drop more chargers in.
Gotcha.
Yeah.
Gotcha. Well, Ben, I mean, it's a really interesting model, right? You guys have thought about the financing. It definitely is a way to increase some other income and add to the NOI of the property. And it sounds like you guys have run all the models to understand where you should be and what adoption looks like. And, you can be slow on the kind of realization of that. So I think that's all seems really well thought out. I mean, it sounds like the takeaway is pretty simple, is that, EV charging isn't so much about, feeling good or sustainability anymore. There really is a bottom line impact. And it sounds like in your model, a lot of the capital up front can be taken out. So it's not as much of a concern for owners. And so it's, a way for owners to maybe kind of dip their toe in the water, understand it, and get some additional revenue, which I know we're all looking for. So yeah, really compelling idea. I appreciate you sharing it with us today.
Absolutely, man. Thanks.
Hey, if folks want to learn more about what you guys are working on, where can they contact you?
Yeah, I mean, you can feel free to reach out directly to me if you'd like. It's bkanner at 3vinfrastructure.com. That's BKANNER at 3vinfrastructure.com. Or go to our website. We're at a lot of the conferences. I'll be at NMHC this coming week. We've got people going to the IMN conference later in the week in Nashville. So yeah, we're around. And again, yeah, I mean, I'd say, hey, look, this is an amenity that I think is really demanded. And so, we're happy to talk to you about a no-cost way to get that in your property and make sure you have that amenity so you can continue to drive that NOI up.
Ben, I think that's well said. Appreciate you bringing it to our listeners. And so if you're an operator yourself or you're an investor, maybe bring it up to your operator as a way to drive revenue. Click in the show notes below to get the link to contact Ben. And with that, Ben, thanks and have a great rest of the day.
Thanks, Kent.